All right. What is going on, future me? Hope all is well. As with every week, want to go ahead and get into my pre-market plan for this coming week. Just kind of jump straight into it. I'm in a very good mood to get into my plan this week. Again, just to get started, we do have the dollar here, the DXY, the daily chart for the dollar pulled up on the screen at the moment. And as we can see, right, I mean, very interesting week this past week. As I've mentioned in the previous pre-market plan, there were a lot of different catalysts that would act as, potential drivers to have price go crazy, as we can see on the chart at the moment. Also, this coming week, we do have a couple of different news catalysts as well. I believe we have JPY's releasing new CPI numbers. I believe there's a ISM PMI for manufacturing and services for the dollar, and then there's some GBP news as well, as far as like MPC members speaking and everything else. I'm not gonna go all the way into all of the news events just because there are a ton, but with that, there are a lot of different drivers that would act as, again, catalysts for price to go crazy in these different indexes. And again, as we can see with the dollar, right, from a technical perspective, you would think that there would be a ton of dollar weakness. We're running into the 618 and this bounce or break liquidity zone. You would think that we would get knocked back and everything else. But when we look at it from the fundamental side of things, right, this last Friday, we had the PCE index numbers print, and they're rising, right? So if I'm not mistaken, that's an index around consumer prices. So prices that consumers are paying at stores and all these different places and everything else. And with that, to kind of go hand in hand, consumer spending has also risen, I believe, from like zero point 0.6 to 1.8 or something crazy like that. And then as well, consumer earnings in turn, which I think is an interesting observation, is consumer earnings are actually going down month on month. So when you look at it from that perspective, it makes a lot more sense why the dollar would be rising as it stands. Again, resistance is still resistance from a technical side of things. So I would still want to see some sort of knockback or some sort of reaction in the current zone. Again, we do have this 105 sort of area, this liquidity zone acting as resistance in confluence with the 618. So I would assume it would be a big week as far as where price is at the chart and what sort of reaction we could be expecting at this particular level. Again, with that, there are a ton of different news events coming out for the dollar this week that could act as potential drivers, again, to go up and break this level, retest, go higher, or make a move down. And as far as just, again, from a technical side of things, when we look at it in the weekly, this reclaim right here looks nuts. Like this reclaim of 103. Also, when we look at it in the monthly in a second here, you'll kind of get what I'm trying to get at here. As far as structure is concerned, we still have this 106 level. This is also sort of in confluence with the bouncer break level we just looked at on the daily. And then very interesting point of view here as well, the local swing high to the local swing low. The fib, we do have a very interesting sort of observation to make here. The 618 in confluence of this previous sort of level of microstructure that we held in the past last year in November. And also we have this thrust candle here as well. So when we look at it again, just from a structural point of view, two very interesting points on the chart that I'd want to see price react to. Of course, that first being that 105, 106 sort of area. And then if we do drive past that, break past it, retest, and continue momentum to the upside, of course, I would want to see what price is doing around 109 sort of 50 area. And just to kind of walk everything back, right? Like when we look at it from the perspective of like how this coincides with like Fed's rate, like raising rates, and then how they're trying to handle inflation and everything else. The last inflation numbers, that last inflation print, what came in hot, right? Like I think it was like 6.5 or 6.4 or something like that. But still sort of making a case for inflation not being able to go anywhere, regardless of the amount of rate hikes and how many basis points we hike every other month or whatever the case is. When we bring the Fed into it, right? So the market is doing the exact opposite of what you would expect it to do, right? Like you raise interest rates, you would expect the dollar to go down. Regardless of that, we still have extremely hot inflation numbers coming out that would drive the dollar to go, drive the dollar up. Excuse me. So I hope that makes sense. Looking at it on the monthly, right? Again, extremely clean reclaim of 103. 3 days left in the month. I don't think that we're gonna fade this strength anytime soon. So when you look at it from that perspective, right, like what could possibly happen between now and the next rate hike or the potential rate hike, right? People are saying that as far as Fed speakers are concerned, they're saying, oh, maybe we should do 50 basis points or 75 basis points. When a couple months back we were thinking like, oh, like instead of 75 and 50, maybe we should do 25 basis points, which is insane, right? When you look at it from the perspective of like where inflation is at the moment and how it's growing, looking at all these different indexes and everything else. But with that, being that, just from a technical perspective, once again, being that we are reclaiming the monthly level at 103 with such strength, again, I would want to see where price sort of falls. where price sort of stabilizes and where it sort of stops up. Again, 2 points on the chart for me and my future self. That 105 sort of 106 area, and then that other level of structure around the 618, around 109, 110 sort of area would be very interesting areas for me to want to take a look at into this coming week. And then just again, before I get off of the dollar, right? Very clean channel break here. An observation we can make here as well is that, if we're seeing crazy momentum back into this bouncer break level, we do have a higher swing high here as well. That would also bring us sort of and tie us back into that weekly sort of observation, being that 618 is around that 109 sort of 110 area. We could even take it a step further, take it up here. So there are a couple different perspectives that we're, standpoints that we could look at it from. Of course, I want to look at it first from the local level, then expand that out if we do find momentum above this bouncer break level and go from there. But once again, going to be interesting to see how this plays out into the coming week. Once again, the overall sentiment, once again, I'm wanting to see dollar weakness. I've been like bullish on gold for the longest time, and it's just now that I'm considering switching my bias again. I mean, it's going to take that 1756 break, and I'll cover that as I get into gold. But with the way the dollar's moving, right? Like we need to see some crazy action taken by the Fed or something. We need to do something, right? Because this is again exact opposite of what you would expect, given the amount of times we've done rate hikes in this whole thing. So that'll be interesting to see how the Fed handles that into the coming weeks, months, and so on. So I hope that made sense. Going into JPYBasket, also very interesting week for the yen. As we can see, right, like very clean retest of the 8,000 level that we just recently broke out of, and a huge engulfing candle to the downside. Just to kind of add a bit more fundamental context to this. Again, as always, do your own research when it comes to the fundamental side of things. Everyone has their own narratives, but for me at least. I believe it was, Wednesday or Thursday, we had the JPY CPI numbers print. I believe it was they were expecting like 4.4%, and it ended up being like 4.3 or something along those lines. Regardless, the inflation target for the Bank of Japan is 2%. We're double that, right? And it's no surprise because of the amount of quantitative easing and the amount of money that they've been printing, right? It's only natural that inflation numbers would drive up, and obviously outside of that, with inflation driving up in other countries, that's also making the price of goods across the country rise. So you can imagine the currency, the yen, is weakening while the rest of the world and their prices are rising. So it looks like shit for the Bank of Japan, and the yen. But with that said, just kind of tying in to what I said in the previous pre-market plan, we do have a new Bank of Japan governor appointed, Ueda. And he did speak this last Friday. So that would, it ties in again to this crazy engulfing candle to the downside that we're seeing at the moment. Basically going into the fact that, I can even pull it up here. Basically going into, sudden tightening now would impact businesses negatively. Obviously, we know from the past that Ueda, historically is a bit more hawkish, especially more hawkish than Kuroda, especially being that Kuroda is keeping rates, at zero, printing a bunch of money, everything else. With Ueda coming back in, you would expect them to want to maybe move away from that. But as we can see, again, he's affirming and standing firm in the same stance that Kuroda had, in that sudden tightening would now, again, impact businesses negatively, leaning towards not, wanting to tighten anytime soon at all. Also, we also have, a couple more tidbits from the speech of his. Bank of Japan can move toward normalization if 2% inflation rate is in sight, which we know, it's like 1 + 1 = 2, right? You print a ton of money, there's no way that inflation goes down, right? So this is just BS, right? There's no way that we're going to normalize, because we're not going to be getting to 2% anytime soon, at least from my perspective. And then also a couple more different takes. It's hard to demonstrate monetary strength if interest rates are close to zero. I mean, it's pretty self-explanatory there as well. And overall, right, just again ties back into the overall stance that Kuroda originally had, that we can't do anything outside of what we're doing right now from a monetary policy sort of perspective, and printing money and doing these different things, because if they did, everything would be uprooted, everything would go to shit, for lack of better words, and everything else. Have a couple of different observations here as well on Bloomberg. But regardless of that, again, just want to make the overarching point clear that Ueda is not wanting to get hawkish anytime soon. And if he did, from his perspective, if he did get hawkish, it would be if, inflation stabilizes around 2%, which we know is not going to happen because of the current monetary policy that we're seeing in Japan. So I hope that made sense. With that said, right, what that means for the yen and what that means as far as the pairs that we trade and everything else, we know, especially with the fundamental drivers, we know that the yen is going to continue to be weak. Excuse me. It's very clear with the way with the way and the sentiment that we're seeing from the sentiment that we're hearing from and seeing from the Bank of Japan. Excuse me, going 100 miles a minute. And so with that, right, again, I would consider or I would expect continued JPY basket downside. As we can see off of the most recent daily candle close, it looks absolutely horrible. We could look left into previous structures here as well. Of course, that first sort of level we have at 77.69, following 75.19, and then thereafter we have 71.50. So of course, I'm going to want to see how price reacts to those different levels from a daily perspective. When we look at it on the weekly, as a ton more context here as well, this is a very well defined and clearly defined range on the JPYBasket weekly chart, right? This is something and an observation that I made in previous pre-market plans. And just in that, again, we were, headed right into this range high in conflicts with these levels of structure, these trend lines here as well that we previously broke out of in the past back in, March of 22. And so with that, we did see that rejection, and now we have even more confirmation of JPY downside breaking into the range mid at that 8,000 level, right? We're now wicking. This most recent weekly candle is now wicking and rejecting that 8,000 level, that range mid, right? So for me, from a weekly macro perspective, where is the next level that we could possibly see price go to, right? It's that level at 7,500, 7,525 sort of area. With clearly defined and clearly expected downside for the yen, that would obviously, incline me at least to want to get long on GJ. I would want to see some sort of stability, breaks, retest, everything else on GJ to get long with clear JPY weakness. Of course, I would want to see GBP strength on the other side of that. But again, I just want to make the point clear that we are seeing very well-defined JPY weakness. Even more so, even look at the monthly, even more so on the monthly, clearly respecting this descending channel. Excuse me, I'm fucking stuttering, I'm going crazy. I'm just excited. I'm excited for this coming week. I'm excited for every week rather. And so with that, it just overall makes a very clear case for JPY weakness. And as we know, the Bank of Japan does like a weak yen. I'm just not sure how weak that is. And so with that, we'll just see how all this unfolds. Ueda is speaking again on Monday at 11 p.m. So I'll be tuned into that as well. I don't speak Japanese, but I'll wait for the translation thereafter. And yeah, that's kind of sums JPYBasket. Moving on to GBP futures. Not really too much going on. We're pretty much in the same place that we left off this previous week. Again, still wanting to kind of see where the cards fall for GBP. There was some news that came out. What was it? I was reading up on it in my analysis this week. Oh, so flash services PMI, very good numbers as well. Manufacturing PMI there as well. So we did see that early week we did see that quick push, and then we did have, I believe there was another news catalyst that made us go make a move back to the downside. Was it? Was it the consumer confidence? I'm not too sure, because after this quick push, we did have that downside move. Regardless, regardless of how good the news was, it was not enough to make any definitive clear move. We're still at the same mercy of the range that we were at, last week. Nothing super crazy. Once again, wanting to see where we sort of fall between these ranges at 119 and 122. Obviously, with the JPY weakness and potential GJ loans, I'm wanting to see. I'd love to see GBP strength at this particular point. I do not want to see these two charts, JPY and GBP, moving in the same direction. As I've mentioned millions of times, I would like these two charts to remain decoupled. To the up, to the downside does not matter. Regardless, when they are decoupled, it leads to very clear price action on GJ overall. When we look at this on the weekly, very clearly defined rejection as well. Let me pull this up. So looking pretty scary. Not too much context on the daily, but when we pull it up on the weekly, it looks extremely concerning, right? Especially being that we're just getting knocked back from this level at the 618, that 124 sort of level. Also creating huge widths to the upside at this sort of range mid between that range high at 126 and the range low around like 114 sort of area. From a structural perspective, completely disregarding fundamentals and everything else, I would expect that move into the 115 sort of area, 116 sort of areas into these coming weeks, especially with the amount of weakness that we're seeing. Also, very interesting observation on the monthly. We're starting to engulf. We're starting to engulf below 121 sort of area. If we continue to close the month out like this, no sort of wick formation, anything crazy, that would be cause for concern for me. If we sort of remain within this liquidity zone, I wouldn't be, super concerned per se. But this could be the makings in the very beginning of potential moves to the downside, right? This is very, just to be a very clearly defined break, retest, and move lower. So I'm just going to be monitoring that into the coming weeks. And so with that can take us straight into the pairs that we'll be trading. I'll start on GJ. Just to be completely transparent, I did take, over the last 2 weeks, I did cover last week's trade. So over the last 2 weeks, I've taken 3 trades. Of course, the last one in my previous pre-market plan that I covered, and then 2 this week. I'll cover them. They were both losers, but very good lessons learned from them. So, just to get started, I do want to start a bit more macro on the monthly here. For GJ, looking pretty bullish, right? Like, especially after this last week's price action and the way that structure has been sort of defined and everything else and built up. We are now seeing long wick rejections. As I mentioned in the previous pre-market plan, after this last month in January, we're seeing long wick rejections into that 156,600 level. That does look bullish, right? We do have a sort of well-defined range between 156,600 and that level at 167, sort of 70. Also a range mid here, 160, 125 sort of area. So very well-defined range on the monthly, although it is sort of a microstructure sort of perspective on the monthly. It's still there. So with that, the next sort of level that I'd want to see, right, especially with the amount of strength and momentum that we're seeing currently, I'd want to see that move into 167.57 just from a monthly macro perspective. I'm not talking about intraday levels. I'm just talking about, what we're seeing on the chart at this current moment. For me personally, I mean, the monthly cup and handle might still be valid, right? But unless we break below and have clear defined weakness below 156 sort of 60, I mean, we should still consider the monthly cup and handle sort of valid, right? After seeing this sort of engulfing candle to the downside end of December, I was sort of considering the fact that it might be invalid. But again, after seeing the way we stabilize and this sort of break and retest sort of structure on 156.60, it's making me reconsider. And when we look at it on the weekly, add a bit more context here as well, right? I've also mentioned in previous pre-market plans, I'm not wanting to be bullish unless we get above 162 sort of area. We are now above 162 and printing above it, not with a ton of strength, but with enough strength for me to say I might be wanting to get long into these coming weeks, right? Same sort of concept with the ranges. As this is my overall philosophy of the market, just looking at it in ranges overall. But when we look at the monthly range, we now have the weekly range here, right? We have the 157 range low, we have the 161 sort of 50 range mid, and now we have the June high and range high at 167.73, right? So when I see clearly defined strength above that 162 sort of range mid, I'm gonna want to take plays and longs into 167.80. It's just that's how the play goes. That's how the plan goes. It's how I look in the market. It's the range. Excuse me. Yeah, I'm going crazy right now. And so with that, right, it even adds adds a ton more context when I look at it on the daily chart. As I've mentioned, right. Previous pre-market plans, we have this lower low, lower high sort of structure looking at this previously when we looked left, and now the more local sort of structure, we have the exact opposite, right? We have, potential higher high, higher low structures forming, and even more so, right? No traffic above 162 sort of area, right? We looked left, like we just got this big print this most recent week. When we looked left, nothing super crazy in the last couple of months, right? Like not since last year, how we had price action in this sort of region. So with that, for me, that would lead me to believe and expect a cleaner price action within these levels. Although when we look even farther left, there was a lot of craziness going on. Looking at it just from a local perspective, very I feel like it's I feel like I wouldn't be wrong to expect further upside after breaking a level like this, right? Potential triple bottom here, a higher high, higher low structure forming and everything else. Overall, triple bottom sort of structure, the measured move brings us back into the range high 167, 168 sort of level. The only sort of cause for concern I would be wanting to take into consideration is this level at the 618, also in confluence with this previous level of local structure, this sort of local support and range mid between 166 and 162. We also, we can also take it from a very, a much more high fib up here. We could, call 166 a more well-defined level of resistance. But I'm just going to, again, be playing it level to level and see how prices reacting to each of those levels of structure. Excuse me. I hope that made sense. I hope I'm not talking too fast for my future self, but hope that made sense. So once again, yeah, you know, we finally got the break of that 162 sort of level. We're now seeing that retest, right? And now having further strength above 162, which again, along with the weekly and monthly, just affirms and adds more conviction to the overall thesis around wanting to take loans on GJ. So when we look at it on the 4 hour, always becomes a ton clearer on intraday levels, excuse me. And so look at this here, right? I took a couple trades around here. I lost them, and when I look at it now, like hindsight is always 2020, but it makes a lot more sense now. And of course, I'll cover it on the 1 hour, the trades that I took, and everything else. Moving back onto the plan, super well defined trend to the upside as we're seeing right here. Very clear defined structure here as well. I did mention this is a bouncer break level around 162. If we do get a bounce or rather a break and retest above this level, this is a bullish reversal into 164. That's exactly how I'm treating it. As we can clearly see, right, we have a clear break, retest above 162, and break higher. Or rather, retest around 162 and break higher, right? So into this coming week, I'm going to want to be seeing the same exact thing, but I also want to remain cautious because as we can currently see, right, we have a very well-defined trend line. And what happens when we see these kinds of trend lines? Looking back, we either get the big squeeze and ascending triangle break to the upside, or we get the squeeze and move downward, rejection, reversal to the downside. So that's something that I'm going to want to be considering, but it's still a little bit early as the trend line and as this sort of structure is still developing as it stands, making it, plausible to me to want to take loans here. And as this arrow demonstrates, I'm going to want to take another retest here around 162 sort of area. Before getting long and before making that move higher, we also have a very well-defined sort of head and shoulders, inverse head and shoulders here on the 1 hour. And overall, right, we've just broken out of this range above 162 sort of 50 area. For me, wanting to position myself into this coming week, this is a very strong level of structure, right? We see multiple weekly candle closes at this level. This is also in confluence with the neckline of this inverse head and shoulders. And as we can see, the measured move is at that next level, that range high at 163, 164 sort of area. Looking at it from that perspective, for me, I'm going to want to take buys on strength and the neckline retest around 162 sort of 50 area. Also outlined by these arrows, very well and clearly defined, right? I'm going to want to see wicks into this area, a push higher. If I do not get that, right, if I make a move lower, right, into this sort of 4 hour region around here where we got this initial push, this very big wick to the downside around 167 sort of 70 area, 161.70 area, excuse me, I would consider that as well. This 162.17 area, I would consider that. So, first area of interest, 162.55. I'm wanting to see a retest with strength and rejection of the downside and a push higher from there to want to get long all day, every day. If I don't get that, I would consider 162.17, also in confluence with the 618. As we've seen, it did clearly act as support on top of this trendline break as well, so I would consider that all day, every day. Last resort would be that 161 sort of 50 area. I would want to see the high time frame confluence on the 4 hour to make sure I'm seeing stability above 161 sort of 70 area, excuse me, to continue long, excuse me. If I do see breaks below 150 or 160, 152, I would just sort of stay hands off. I am sort of bearish below 162, so if I do see crazy rejections below that level, I would still want to get short at that point. And so again, I would want to see clear stability overall above 160, 152 to remain, or whether 160, 160 and 70 sort of area to remain long and get in on breaks, retest, everything else. So I hope that makes sense. Again, 3 areas, right? 161. 161.59 and 60 sort of area, 162.17, 162.55. I'm buying from all of those areas. If we do break to the downside below 161.41, I would consider shorts. I'd need to see where we look at, where we're looking as far as high time frame confluence is concerned. So that leads me into the 2 trades that I took this last week. Of course, as I mentioned in my previous pre-market plan, very simple, straightforward mistakes that I've made here. I wanted to get long on braids retest above 162, right? That's exactly what we saw right here. Huge engulfing candles to the upside. I was like, wow, clearly defined strength. And we started to see, very normal retrace back to the downside. That was not an issue for me. And then I saw this candle right here, right? This sort of potential morning star and potential retest and, bouncing point starting to form right here. And I was like, let me look at it on the 1 hour and see where I need to be, because I would definitely consider getting long at that point, because that was part of my plan. So that's exactly what I did. I started to see, that price broke down here, this engulfing candle, and I'll get into that later. And then I saw that price started to stabilize, right? Like, it started to sort of consolidate, build a small base, and push back into that level that just broke out of around 162 sort of 50 area. And it wasn't these candles that really enticed me. It was this candle right here. This candle right here that enticed me. I saw that we were, it closed above, it solid bodied above the range of the previous candles before it, the last like 7-8 candles before it. And then the following candle thereafter just, solidified it for me as well, right? We very clear wick to the downside and solid body to the upside. So I was like, we might be getting the reclaim of this sort of range the range low that we broke out of, and seeing further upside, especially when I looked at it on the 4 hour. It just made sense to me. Looking back, my mistake here, right, was not waiting for even clearer stability. I could have waited for, an even bigger engulfing candle. And who's to say, right, like, if I would have saw this one later, right, this engulfing candle, maybe I would have took that one and still would have lost, so it would have still been in the cards for me. But regardless, I could have still waited for more clearly defined strength. Also, this engulfing candle, right, this engulfing candle is a sell signal to me. So typically, like, if I'm looking for sells here, I think it was my bias towards buys that kind of messed it up. If I was looking for sells here, right, and I saw this engulfing candle to the downside, I'm like, fuck. That's a clear break of structure. I'm wanting to see a retest below that, like around this level, 162 sort of 60 area, to get short, right? So if I'm looking at it from a short perspective there, and I didn't take it, I would want to see the same exact thing on a long, right? Like, I would want to see a clearly defined, huge, engulfing candle to the upside, wait for a retest, get in on that end, right? So for me, the main mistake that I always make, or one of the two, either active managing or getting in too early. For this one, I got in way too early. Way too early. I should have considered this engulfing candle a little bit more closely and waited for more clearly defined strength to the upside above this level of structure. And that leads me into my next loss. Also, same mistake. Got in way too early. I'm going to move this over to the side here, because this is the candle that I got in on, right? Look at this huge fucking wick. Absolutely disgusting wick. I should be ashamed of myself. With that, right, like, I'm not ashamed of myself, because I'm learning every day and I evolve every day. That's just what it is. You don't get hung up on one trade, unfortunately. Maybe some fucking loser from the past, but anyways, with that, right, look at this huge wick to the downside, right? I saw this candle when it was engulfing initially, right? And this is something I always tell myself when I'm about to get into a position. If you cannot wait for the candle closure, you should probably not be trading. And for whatever reason, I didn't listen. I got in anyways. I saw that, I don't know if I, especially after this previous downside, right? We had this huge move to the downside. I'm like, damn, like maybe I missed the move. So two sort of things, right? I got in too early, and then I ended up chasing the move a little bit, right? Because once again, I did not wait for this candle to close. I saw this candle engulfing to the downside, and I was like, fuck, we're gonna break 160, 150 again, and I can get in a little bit early. See a micro test reach or micro structure retest and get in, sell it into 160 sort of area, the next level of structure, and move on from there. Did not work out that way, because I did not wait for the candle closure. If I would have waited for the candle closure, I would have never even been in this position. I was also up at 1 a.m. I typically stop trading around 12. I still am open to and consider pre-London trades. That's the session I trade. I trade New York and I trade pre-London. So anytime before 3 a.m. is considered pre-London, but I have more stricter rules in place that, basically say at 12, it's over with, right? And so with that, I would have never taken this trade regardless, right? Just overall error, less mistakes equal better trades. This is just a very shitty mistake. Should have waited for the candle closure. Should have not got in early. Shouldn't have even been trading at 1 a.m. period. And so with that, those are just mistakes I'll be looking to improve on into the coming weeks, months, years, and everything else. Very simple mistakes, right? And it's important that you identify these mistakes and make change to make sure that you don't continue to make the same ones moving forward. And so with that, those are my trades for the last week. I hope that makes sense as far as my plan is concerned for GJ as well. Moving on, that leads me into gold. I'm fucking going a mile a minute today, man. I'm excited. Where is it? Let's go to the weekly. Actually, let's go to the monthly, right? Very clearly defined range high rejection on the monthly here as well. Honestly, I'm for this coming week, I want to kind of keep my hands off of gold unless I'm switching my buys to sells, which I don't know if I'm ready to do just yet. Especially with, again, the fundamental drivers, around the dollar, and it's supposed to be going down, although it's not because inflation is going crazy. I'm not ready just yet to get bearish on gold. Although we have seen this triple top here sort of develop, we're now breaking this range mid between these range high levels at 1982 and 1678. So of course, as we're breaking into these range levels, the next sort of level to level play I'm going to want to see is into that 1700 sort of area, 1678 sort of area from a monthly perspective. Excuse me. And so with that, right, just again, 2 days left in the month, 3 days left in the month. I don't think we're going to have nearly enough time to fade this weakness on gold. And so with that, right, like I'm just bracing myself for the absolute worst as far as downside on gold is concerned. Again, looking at it from a level to level perspective, the next level of structure I'd consider or want to see more, we can consider a micro level, right? A micro structure sort of level here as well around, 1756. Look who it is. 1756, very clear defined intraday level as well. And then outside of that, 1678, I would consider. Excuse me. Looking at it on the weekly, let me move this fib. I don't know what this is doing here. Looking at it on the weekly, again, just very clearly defined weakness, right? Like we're moving into this weekly range mid with a ton of bearish momentum. I would love to see some sort of stability above this level around 1805 sort of area. But we're just not seeing it at the moment. I mean, I don't have a crystal ball. I don't want to sort of try to predict that we get a bounce here. I would want to see how price and structure develop into these coming weeks, especially with the amount of momentum and steam that we're coming into these levels with, right? A ton of momentum to the downside. So for me, I would want to wait for breaks or potential stability above 1805 overall, and then breaks below 1805 to confirm further downside into 1756 into the coming weeks. Added some more context on the daily here as well. And I apologize if I'm kind of rushing through gold. I'm just, again, wanting to stay hands off on gold until I see it form some sort of floor and stability, or I switch my bias at some point after seeing a ton of structures getting broken. So I had the perfect opportunity to get short up here, but my bias towards buys didn't allow me to take those sells, right? Regardless of whether it was a good or bad decision, it doesn't matter. But I'm just saying again, like, that's what it's cost me, right? So we'll see how much longer the gold bull in me lasts. So with that, again, we are moving, very interesting observation. We are moving into the 618 in confluence with this level of microstructure around 1805. So of course, again, into this coming week, I am wanting to see some sort of stability here, right? If we fall a bit further, of course, the 786 and 1777 in confluence with this level of liquidity here would be considered for me right before 1756. But again, in the perfect world, I would want to see some sort of stability around 1805 and a reclaim on the daily above the 1830s and everything else. If we don't see that, of course, I would wait for price to find a floor around 1790 or 1756. If we break 1756, all bets are off. I'm completely bearish and going to wait for bearish retests thereafter, unless we reclaim 1756 with strength at some point. Just because, again, you look left, and this is just a very well-defined level of structure, and as well as like 1678, excuse me. Hope that made sense. Looking at it on the 4 hour looking like shit. Ever since I saw this fake out of this ascending triangle, all bets have been off for loans, right? Like very, again, well-defined levels of structure to take shorts from. I have just not done so because I am a perma-bull when it comes to gold, right? To my dismay. And so with that, we do have a fib here, local swing high to local swing low that acts in confluence with this level of structure around 1830 if shorts were on the table. Overall, looking extremely bearish as we approach 1805. We do have a channel here as well, a descending channel. And so if I'm wanting to get bullish here, right, of course, I'm going to want to see stability above 1805 and breaks above this sort of channel level, right? Very safe buys for me would be above 1829, breaks retest above 1829. Earlier buys for me would be strength and stability above 1805 and moves into 1829 and potentially higher than that. So I would consider those buys there as well. But with the amount of momentum that we're seeing to the downside, right, into 1805, I wouldn't be surprised if we just break straight through it on the open and on the open on Monday as well into 1782 and lower than that. So I'm not taking that off the table. I'm not taking that out of consideration. Everything else. But again, as far as me wanting to get long and be bullish on gold overall, I need to see stability above 1805 with rejection to the downside and moves up. I take that level to level from the 1805 range low to the 1829 range high. I would also take breaks, reaches of 1829 into 1865 all day, every day. So pretty straightforward for me on the 4-hour. Becomes a bit clearer on the 1 hour here as well. Let me just go ahead and make this a bit clearer. Again, looking extremely bearish. We do have a potential rounded bottom on gold, right? But this is, this could potentially be a retrace back into these previous levels of one of these previous levels of structure before you move down. And just to tie into what I said on the 4-hour about 1829 buys and breaks and retests above 1829 being valid, adds a ton more context here on the 1 hour, right? Very well-defined level of resistance around 1824, 1825 sort of area, also in confluence with the 618, right? So if we also, if we break this channel, also break above the 618, also break above 1824, it's safe for me to say, right? I could take that range break into a move to either 1833 or 1844 as far as loans are concerned, right? And then on the other side of that, of course, shorts would be valid on rejections of those levels. I don't know if I'd want to take shorts there. Again, overall being bullish on gold and bearish on the dollar. But, who knows? What I consider sells there. I might consider sells on a rejection of 1824, maybe. Also, breaks below 1801, I might consider sells there as well. Outside of that, wanting to see stability above 1805, this sort of range low level here as well. I would play that into 1818 and higher than that potentially. So I hope that made sense. I also added balloons here, very well defined and clearly, clearly spelled out plan. I would look for buys on breaks and reaches above 1824. Also, buys, breaks, and reaches above 1846, and so on. Just literally playing each of these zones and levels, level to level, as with every week. So I hope that makes sense. That pretty much sums it, right? Just to sum everything on gold, again, taking breaks, retests above 1823 and higher than that. Also would take stability and buys above 1805. Would maybe consider sells below 1805 and well-defined weakness below 1805, and maybe would consider bearish retest below 1824 and rejections of 1824 and sells lower than that back into 1805 sort of area. As far as GJ is concerned, let's go ahead and get this on the screen. I would consider breaks retest. I am bullish on GJ as it stands. I would consider breaks retest above 162 sort of 60 area and higher than that into the 164. I would also consider the 618 and 162 level of structure for buys, and then finally, last but not least, the 161.50 sort of area for breaks, retests, and buys above that. If we do break below 161.50, 161.70 sort of area, I would consider flipping back bearish and taking it level to level. Of course, breaks, retests below 161.50 would be considered, and everything else. So I hope that makes sense. Future me. God bless you, bro. I love you. I hope that everything's been great. You living, to your utmost potential, making shit happen. As always, God bless you, bro. God bless everybody watching, and yeah, take care.